The first time I put $100 into an investment account, I genuinely had no idea what I was doing. I picked something, I pressed a button, and then I sat there wondering if I had just made a terrible mistake. Here's what I didn't know then, and what most people never get told. That $100 wasn't really about the $100. In 2026, the average person delays starting to invest by almost 4 years after they first think about it. 4 years. And the cost of that delay in actual dollars is something I want to show you today. Because if you're sitting on the fence about starting, or if you think you need more money before investing is worth it, this video is going to change that. Let's get into it.
Here's the situation I hear constantly. You've been meaning to start investing. You've said it to yourself, probably more than once this year. And every time you sit down to actually do it, something gets in the way. It might be that you don't have enough money yet. $100 feels embarrassing, like what's the point? What is that actually going to do? Or maybe you've opened an account and then closed the tab because you didn't know what to choose. There were too many options. ETF, index fund, individual stocks, crypto. Everyone online has a different opinion and half of them seem to be selling something. So you wait. You tell yourself you'll figure it out when you have more money, when things settle down, when you understand it better. And the waiting is the problem, not the confusion. That's fixable. The waiting. Here's a number I want you to hold in your mind. $100 invested at 25, left untouched in a broad market index fund, averaging 10% annual return, becomes approximately $4,500 by the time you're 70. The same $100 invested at 35 becomes roughly $1,700. Same amount, same effort. 10 years of waiting costs you $2,800 on a single $100 decision. And most people aren't waiting 10 years on one decision. They're waiting on dozens of decisions every single month. So let's actually fix this. Here's what getting started with your first $100 looks like, step by step in 2026. Step 1. Open an account today, not when you're ready. The myth of being ready to invest is what keeps most people out of the market for years. You do not need to understand everything before you start. You need to open the account first. In the US, that means a brokerage. Fidelity, Schwab, or Vanguard are the three I'd recommend for beginners. All free to open, all free to use. Takes about 10 minutes. Step 2, put the $100 into one thing. Not 10 things, not a diversified portfolio, one thing. For a beginner with $100, that one thing should be a total market index fund. In the US, that's something like VTI or FXAIX. These funds own small pieces of hundreds or thousands of companies simultaneously. You are not betting on one company. You are betting on the overall economy growing over time, which over every 20-year period in recorded history, it has. Why index funds? Because in 2026, study after study confirms that over a 10-year plus horizon, the overwhelming majority of actively managed funds run by professional investors paid to pick stocks, underperform a simple index fund. You don't need to be smarter than the market. You just need to be in it. Step 3, automate the next $100. This is the step most people skip. Open your bank or brokerage settings and set up a recurring monthly transfer, even $50, even $25, into the same fund. Automatic. No decision required next month, no willpower, no forgetting. The reason this matters is compound interest, and it works in a way that's deeply counterintuitive. In the early years, the growth looks almost invisible. In the later years, it looks like magic. The first $100 isn't your most important investment. The habit of investing is your most important investment. Step 4, do not watch it every day. This is the hardest instruction and the most important one. Markets go down, sometimes dramatically. In 2022, a broad U.S. index fund dropped nearly 20%. People who sold locked in that loss. People who held and kept adding recovered fully and then some within 2 years. The biggest threat to your investment returns in 2026 isn't inflation, isn't interest rates, isn't any particular company failing. It's you making an emotional decision on a bad day. Set up the automation. Log in once a month to confirm it's running. Otherwise, leave it alone. 4 steps. 1 account, 1 fund, 1 automation, 1 rule about not touching it. That's the entire playbook for your first $100. The amount is irrelevant. The start date is everything. Compound interest doesn't care about the size of your first investment. It cares about when you started. A person who invests $100 a month from age 22 to 32 and then stops, investing nothing more, will have more money at 65 than someone who invests $100 a month from 32 to 65 without stopping. The early decade does more work than the next 3 decades combined. Starting small today beats starting big later every time. Confusion is not a reason to wait, it's a reason to simplify. The investing industry is complex. It does not need to be. For a first-time investor with limited capital, one low-cost index fund covers the entire stock market and outperforms most alternatives over time. Complexity is the enemy of starting. If you find yourself researching for more than a week before taking action, the research is not helping you. It's replacing action with a feeling of action. Your first investment changes how you see money permanently. This is harder to quantify, but it is real. Once you have money in the market, even $100, you start reading financial news differently. You start thinking about purchases differently. The shift from being someone who earns and spends to someone who earns, spends, and invests is not just financial, it's psychological. And that psychological shift, once made, is compounding too. You've got the first step. Account open, first $100 in, automation setup, hands off. But here's the question that comes next for most people, and it's a good one. Once the habit is built and the money is growing, what do you actually do with it? What does the path from $100 to something that genuinely changes your financial life look like? Now that you understand how to make your first investment and why starting today matters more than the amount, the next logical step is to understand every real way to grow that money into lasting net worth. For that, I want you to watch this video right here.